check the website. Last week in our U.S. Bank Economic 360 segment, we talked about the power of reversion to the mean and the market's long-term average return. We know we left you wanting more, so this morning, U.S. Bank Vice President and Senior Portfolio Manager Mike Denneman is back for part 2. He's with Business Watch producer Kelly Leon in the studio to talk about whether we can put theory into practice. Mike and Kelly.
Thanks, Peg. So glad you're back this week.
Good morning.
Because I have forgotten what reversion to the mean means. So start with a recap.
Sure. So just, quickly, we talked about last week how the market over the longer term trends toward a consistent average annual return. Right. So again, over the long term, decades or more generally we're talking here, the market will average about 7 or 8% per year. So again, remember that the market can be wildly volatile in any one given year. We can have very high returns, we can have very low returns, but over time that smoothing of those different peaks and valleys into that average return is what we call reversion to the mean. So those outliers reverting to the average, a very powerful force in investing.
All right, so when it comes to putting that into practice, so our everyday investing.
Sure. The good news is it can be done.
Okay.
It sounds like a very academic type theory, but the reality is that it can be put into practice by just about anyone with even a modest amount of investments. Probably the easiest way to implement a strategy here is what is known as buy and hold, which at base is simply identifying high quality, reliable investments and then buying and holding them indefinitely, as opposed to rapid trading, always buying, always selling. A couple key points here. By definition, holding for the long term gives you that extended period where you need for the average to work in your favor. For instance, a buy and hold investor recognizes that the market can be very volatile in the short term. By jumping in and jumping out, with the market as unpredictable as it can be, you can really hurt your portfolio longer term. On the other hand, buying for an extended period, holding on to those securities allows the reversion to the mean to work in your favor. So if that sounds even remotely familiar, it's probably because high-profile investors like Warren Buffett, for instance, he's made a career of buy and hold investing, and not only a career but a fortune while doing so.
And when we all like a little piece of that action there.
Exactly.
So most of us have 401ks. Is this a way to use our 401k?
That is a great point. A 401k is almost tailor-made for a buy and hold type strategy. First off, it's got that long-term potential. Most of us have a decade at least or more until we're going to retire. So by definition, we've got that long-term ability to use reversion to the mean. Also important is that many 401k plans will have as an investment option an index mutual fund. Also very well designed for buy and hold type investing. So 401ks and reversion to the mean can work very well together. Get a plan, put it in place, and then just let that power of the market long-term average work in your favor. With a very important caveat. Buy and hold does not mean buy and ignore or buy and forget about forever. It is important to periodically check in, to rebalance, to make sure that the plan that you put in place is still going strong. So periodically checking in is fine. Worrying about all the short-term market swings, you can just forget about that.
How often, Mike? How often should you check in?
A couple times a year is not bad.
Gotcha.
Because remember, with your 401k, you're continually adding to it, and so that allows you to do what we call buying on the dips when things get low. You buy less when things are high. So the allocation should, over time, be pretty much according to plan. But again, checking in always helps. Always make sure that from time to time you're still on your plan.
All right, great advice. Buying on the dips.
Buying on the dips.
Another new phrase we've learned. So there you go. Thanks, Mike.
You're welcome.
Okay.